Hey everyone, welcome back to Alpha Insights. I'm Kristen, and we've got a jam-packed market check today.
And I'm Ryan. Quick heads up. If you have questions while you're listening, drop them at stockalpha.ai and we'll get to them.
Okay, so today we're unpacking where Cizzle Brands actually stands on the road to listing on a major U.S. exchange. There's a lot of progress, and also one big sticking point. Let's dive in.
Right. The short version? The business story is improving fast, but the listing story is mostly a price and share structure conversation. We'll explain what that means.
First up, the operational wins. Cizzle started on CBOE Canada and then moved to the OTCQB, snagged DTC eligibility, and has been working the U.S. retail channels. That path is pretty textbook for a small cap trying to get U.S. investor attention.
Yeah, that's a good point. The real eye-opener is the retail proof. Sea Wench Hydration getting into Target locations in the Northeast and Midwest was a major commercial validation. It showed the product can sit on American shelves at scale.
And then the most recent quarter really amplified the operating side. For the 3 months ended April 30th, revenue came in at $12.6 million, which is about 253% higher than the same period last year.
Right, and importantly, they recorded their first quarter of positive adjusted EBITDA in the first full quarter running the factory they bought. That's a meaningful shift. Manufacturing control is starting to show up in the numbers.
Totally. 9-month revenue is about $21 million, with the manufacturing business contributing $11.7 million of that. So the factory is not just strategic, it's material to revenue now.
Plus, the distribution gains keep piling up. National Walmart Canada listings, hundreds of Loblaws and Real Canadian Superstores, Save on Foods, and convenience rollouts at Canadian Tire, Gas Plus, and other fuel retailers. All told, the product is in more than 6,700 locations across Canada, the US, and Europe.
And, fun aside, the company used its factory to produce a limited edition blue cherry flavor around an NHL draft moment. Small, but it shows vertical integration in action. So if you only looked at operations, distribution, revenue growth, a margin inflection, you'd say momentum is real. But let's pivot to the listing requirements and where the gap lives.
All right. NASDAQ's initial listing standards for the capital market have a few mechanical tests. Depending on the route, exchanges look for things like at least $15 million of market value in unrestricted publicly held shares, 1 million unrestricted publicly held shares, about 300 round lot shareholders, and a $4 minimum bid price. Plus a separate financial test like $50 million of market value of listed securities.
NYSE American is similar. A $4 minimum price, $15 to $20 million of unrestricted publicly held share value depending on the test, and a few hundred public shareholders. Those are not soft suggestions. They're formal thresholds.
So here's the honest math. The company's materials show roughly 224.5 million basic shares outstanding and a market cap in the neighborhood of $80 to $85 million. That implies a share price of about 36 to 38 cents today.
On a fully diluted basis, counting options and warrants, the share count jumps to about 315.6 million. There are around 28.3 million options and 62.8 million warrants that could add shares over time.
That math makes the problem obvious. You can build revenue, you can build distribution, you can even tidy the cap table. But unless the share price gets near a $4 bid or management executes a reverse split, it's hard to meet that specific exchange test.
So the realistic mechanical paths are sustained share price appreciation, a reverse split, or some combination. I mean, that's not glamorous, but it's how these uplist mechanics usually play out.
Exactly. And for context, Research Capital started coverage with a $1 price target, which is one analyst's view and not a promise. Analysts note there's still meaningful overhang and insider ownership sits at about 44%, which aligns management with shareholders but concentrates control.
There's also been some recent financing moves. A senior secured convertible note that raised 6.2 million US dollars, plus a 1 million Canadian dollar convertible note that was converted into common shares, and a prior oversubscribed 4.5 million Canadian dollar placement. Management says simplifying the cap table is a priority.
Which is smart. Converting debt to equity can clean up near-term obligations, but it also changes dilution dynamics. So watching how the company manages option and warrant overhang will be important.
So, quick reality check. What should listeners take from this? The company is making tangible operational progress. Distribution, manufacturing, revenue, and a first profitable quarter on an adjusted basis. But the listing is a price problem, not a concept problem.
Right. For long-term observers, that discipline is a feature. Management is lining up distribution, governance hires, and capital structure moves under a realistic timeline instead of promising a guaranteed uplist date.
Bottom line, Cizzle is a platform that's gaining traction and professionalizing. But anyone watching an uplist should watch share price, dilution, and the next quarters for continued revenue and margin trends. Honestly, I was a bit surprised by how much the factory moved the needle this quarter.
Yeah, same. The speed from concept to shelf with vertical integration is a real operational advantage.
All right, let's wrap with quick takeaways.
First, revenue and distribution are accelerating, and the factory is proving its role.
Second, they hit their first positive adjusted EBITDA quarter, which matters for exchange applications and credibility.
Third, the main obstacle to a U.S. exchange listing is the share price and fully diluted structure, not the business concept.
Got questions? We'd love to hear from you. Head to stockalpha.ai, where you can ask anything and we'll answer live. And while you're there, check out more market content and our Q&A feature.
Thanks for listening. We'll keep tracking the next quarter and any cap table moves. See you next time on Alpha Insights.